What do you make of this?
I think it's an interesting fund. I mean, BTD is a fun name. The ticker is also fun. It's DIP, so DIP. And as you know, if your ticker game is strong, I mean, chances are retail traders will likely remember it. So this fund is new because it aims to invest in companies that are deemed oversold by the proprietary algorithm. So the algorithm will look into liquidity levels, trading volume, past performances, and then if it deems it oversold, then it'll buy it. And of course, if the proprietary algorithm doesn't see any oversold firms, then it'll just invest in ETFs or cash and cash equivalents.
Really curious about how they're defining oversold. How are they defining what goes into this actively managed ETF in the first place?
So the whole filing just says proprietary algorithm, so I think it's obviously their secret. But then in the traditional concept, we have the RSI, Relative Strength Index, and a reading below 30 means that it's oversold, and above 70 means it's overbought. So now we have those up on the screen are the oversold companies for today. And for the broader market, though, the S&P is neither oversold, neither overbought. It hovers around 54. It hit 30 earlier in June, almost 30, rather.
Are they going for retail investors here when you've got a sexy sort of a ticker name, as you say?
I like that term. I asked David Lutz of Jones Trading, and he said that likely, I mean, but we don't know if they will buy it. The fund hasn't even launched yet, but it seems that that's their captured audience. I mean, for them to even name the fund BTD and the ticker to be DIP, one can just assume that, yes, they are targeting them.
I'm curious when you said if they don't hit oversold levels, they'll hold cash or cash equivalents. I'm curious, you could look at this two ways. On one hand, cash, after inflation, you're losing 8.5% a year. The other hand, if we're trying to avoid a type 2 error, how to avoid losing money, how to not lose money, cash looks good. If it is overbought, how do you think about holding cash in a portfolio?
A lot of investors now allocate to cash, but conservatively, because, I mean, equities aren't doing so well now. The 60-40 portfolio, it's in question. Even bonds are kind of not behaving. I know you're the expert, not behaving the way that you would expect them. So a lot that I talk to allocate some, and some also tell me they do real assets. This includes real estate.
Yeah, how do you look at any of the rivals to this new actively managed ETF? Are there many others that do this, and do they do very well?
So Dave Lutz told me actually that this strategy isn't really the most unique in that he said if retailers want to buy the dip, they can just invest in Cathie Wood's ARK, QQQ, or KWEB, which is a Chinese fund that tracks internet companies. So it really remains to be seen. I want to cover it when it launches. I want to see the holdings. I want to see if companies will take it as a compliment if they're in the holdings.
Yes.
That means a certain thing. So it's exciting. They certainly had fun with the ticker and the fund name.